What's up, mi gente? It's Anthony Rosa, the Community Finance Coach, aka Mr. Remedy, and you are watching another Lunch and Learn on the Fresh Start Advancement Money Monday. And I'm super excited. I have my buddy Lawrence Zhao here. Lawrence, welcome for the first time. Thank you for coming on. Please introduce yourself.
Hey everyone, my name is Lawrence Joe. I'm a mortgage banker with Loan Depot doing residential mortgages. I also do commercial lending. Anthony, thank you so much for having me on your show.
Yeah, absolutely. You know, here on the Money Monday, we like to do these lunch and learns, give different perspectives from different speakers. And I'm really excited today. We're talking about lucrative financing strategies. And for those that are watching, if you're in the real estate industry, if you want to get into the real estate industry, if you're an investor, if you are a future investor, we want you to reach out to us. It's very important that we have these conversations. And, you know, I've been working on credit for the last 9 years now. And I think that credit is something that people take advantage of. And it's really the fear of the unknown. So I'm hoping that today's conversation, we can inspire, connect, and educate you. And without further ado, Lawrence, please tell us a little bit more about what you do and what we're talking about for today.
Sure, let's talk. You said fear of the unknown, right? A lot of people are also afraid of, hey, I want to be a homeowner, but I'm nervous. Where do I start? The first step is definitely to get pre-approved, and there should be no fear in that. We're checking a baseline. We're figuring out what this person can get pre-approved for right now, and if that's not enough, then we can figure out alternatives, right? Alternatives might look like saving up more money, improving credit with Anthony, bringing on a co-signer, or changing the loan product. So we're here to serve not just first-time home buyers, which a majority of my clients are, but investors as well.
You know, so Lawrence, I appreciate I'm meeting you at the NAREP Gala a couple months back. And, you know, you stood out from the crowd because you went really quick at identifying who a good referral partner is for me. You went into your Rolodex, you made a three-way connection, and I was so appreciative of that. I was taken back that I had to figure out how I can repay you as fast as possible. And so can you talk to me in the last couple of weeks, talking and building relationship? You've shared with me that there are some programs that you can provide to other loan officers that are within my network. So what are those products that you're very proud of that you can offer and assist other loan officers close their deals that they're not able to?
Sure. I think some of the conversations that you help facilitate over the last couple of weeks are between myself and like financial planners. And those conversations typically have gone the route of, hey, if your client goes and works with a large chartered bank, like I'm not going to say any names, but any of the large banks will cross-sell products and likely make best efforts to take your assets under management. With us just doing mortgages and us just being a mortgage bank, we don't have those products to cross-sell. So these financial planners, financial advisors, it would benefit them to work with a professional like us, where we're specializing in just mortgage products. We're not specializing in CDs and auto financing and all these other things that would detract from our focus. Our expertise is mortgages through and through. First-time home buyers, investment products, HELOCs, closed and second loans. That's our specialty right there. So we're providing very competitive pricing, top-notch customer service, and that's how we're helping out these clients. Fun fact, Anthony, did you know that 1 out of 4 deals done in our neck of the woods is done via cash?
Now, how many years have you been in the industry?
I've been in real estate for 16 years, with the last 5 years being in real estate finance.
So you're not something new to the market and the market conditions.
No, but back to like can we just touch on the 1 out of 4 deals being done in cash right now?
Okay.
So 1 out of 4 deals is done in cash, and there's advantages of going cash, right? Your offer is more likely to get accepted because there's no contingencies, no financing contingency there. They could close quicker. With that being said, like a lot, like 1 out of 4, that's a large percentage. 25% of the deals are being done via cash. We
Mm,
have the ability to do something called delayed financing, which is a cash
okay.
out refinance for these home buyers. So let's say if somebody went to their financial planner or financial advisor and said, "Hey, I want to buy a home. The cost is $1 million. I want to pull out $1 million and buy this home with cash because I want to remove my competition. I want to like drastically remove my competition there. Um, get them 80% loan to value, basically on a cash out refinance within 6 months of them closing, using a primary residence purchase mortgage rate. So not a cash out
Wow.
refinance, but a primary residence purchase rate.
That's important. And
Yeah.
that's why I wanted to ask you, how many years have you been in the industry? I was going to wrap it around, but you kind of went right to it because I wanted to show how seasoned you are. There's not a lot of loan officers that are kind of navigating the buyers down this process. And I think that the more that we understand and put these terms and make them more public, people can understand and have a better strategy.
Yeah, this is definitely one of the strategies that's being used by some of the more financially savvy buyers in the market. If they have the funds, they're going this route. Another popular product uh, is our adjustable rate mortgage right now. So like
Say that again.
an adjustable rate mortgage ARM.
Okay.
Our 7/6 ARM is competitive. So people that have higher credit scores, let's say like 780 plus, putting at least 20% down, they're going to get an excellent rate on this in the low sixes.
Mm-hmm.
And with my bank, we have something called our lifetime client guarantee program.
Okay.
Let's say if this buyer closes with a 6.125 interest rate with this adjustable rate mortgage, let's say next year the rate starts with the number 5, it'll be a good opportunity for them to refinance. And when they want to do that, then we waive our bank fees. So our origination fee, we have a flat origination. So in New Jersey, it's $1,590. Cost of appraisal really depends on the property type. Let's just say it's around $500 or $600. So if we round up the 1,590 to 1,600, add another $500 or $600 in there, that's north of $2,000 in savings. So even if you're comparing us apples to apples with another lender, it's not apples to apples. Overall, if we zoom out, look at a macro level, we're saving you a lot of money over time.
Right.
And that's not just for the first refinance, that's for every refinance going forward, lifetime.
And I love it. We're talking today about lucrative lending strategies and, how can we really understand what our options are. And so, Lawrence, for those that are watching, do you find it more difficult in this market to purchase? Do you think that people should just hold off and wait? Or what are your thoughts on that?
There's this very corny real estate joke that's very accurate. Anthony, when is the best time to buy real estate? The answer is always going to be 5 years ago. Buy real estate and wait. Don't wait and buy real estate. In our neck of the woods, if you just look at simple supply and demand, demand far exceeds supply. We're so close to the epicenter of, in my opinion, the world, Manhattan, that we have a lot of people that are willing to commute. So even people that are moving to the, say, like Essex County, they're commuting into the city, and that's going to drive up the value. If we look at like Bergen and Hudson counties, those values will always be consistently good, and equity will continue to rise just because of its geographic proximity to Midtown.
Right. So there's another saying, slow feet don't eat. So, slow to get to the market, by the time you get there, you might,
These same clients may be thinking about something else called private mortgage insurance, PMI. So
okay.
they're probably thinking, hey, should I save to get 20% down and then buy a house because I won't have to pay for mortgage insurance? And
It's true.
that answer is going to be a little bit longer. I'm going to say it depends, right? If you have a good credit score, and Anthony is the person to talk to if we need credit score assistance. So if you have a good credit score, let's say like 750 plus, your private mortgage insurance rate is going to be not too bad. It's going to be cheap. One thing that we do here is we shop for your mortgage insurance, and we could do that before we even go into underwriting. So I can start looking at different products for you immediately from jump. So
Mhm.
it's oftentimes a lot cheaper than what someone thinks. So somebody was buying, so I was working on a pre-approval. Somebody's buying like around a $400,000 condo in Jersey City over the weekend. They're going to put down 10% down. Their mortgage insurance, their private mortgage per month was cheap. Like, Anthony, you could say how cheap, and it was like under $30 a month.
Wow. Wow.
So do you want to wait to save up 20%, or do you want to just go ahead now and go with 10% and just pay the
Right.
$28.31 in mortgage insurance?
So and I mean, so I guess that's the big fear, right? Everybody not understanding the numbers there. And once you start to break it down, I guess it makes sense. Don't wait.
Don't wait. Let's take a look. Let's take a look. Everybody's scenario is different. No two mortgage scenarios are alike. And we're happy to look at every one of them with a fresh set of eyes because every one of them is unique.
I really love that with the assets under management, having different strategy. So can we talk a little bit more about that, from like a financial planner point of view? I know you said that, or you say you don't cross sell, but tell me a little bit more.
Sure. So big banks often have, and this is going to be, for lack of a better term, I call it a rich person discount. Rich person discount works like this. You go to a large bank, they're going to say, okay, this is your base rate, but if you move a little bit of money around, and a little bit of money is like six-figure money, move 6 figures over with us, we'll reduce your interest rate by a quarter point or 3/8 of a point.
That's what where would that compare now with where the market is?
So let's just go back to the assets under management. So this client, they would be inclined to take this money and possibly move it over with that bank. So from their current financial advisor, let's just say it's $1 million. They move $1 million from financial advisor to the large bank. The large bank's now managing their money. So that financial advisor just lost out on that. With us, we have competitive pricing. We don't cross sell, so we don't have the ability to say, hey, you deposit 6 figures worth of money with us, and we're going to reduce your rate a quarter point or 3/8 of a point. But we do have competitive product, competitive on jumbo rates, competitive on conforming rates.
Wow. And so who do you partner with, or where do these loans or funds are coming from?
So these loans, a majority of them are in-house. So Loan Depot is funding them. On some of the jumbo products, most of the jumbo products we're doing in-house too. Some of them we might be brokering out.
So it makes sense with the different options that you guys are able to provide because you're not limited or restricted to what other banks are restricted to.
Right. It depends. Again, like every one of these scenarios is going to be unique. Depends on the client. Depends on the property they're looking to buy, and when they're looking to close. So we take that all into account.
Right. And look, real estate is one of those things that everybody dreams of it, wants to get involved, but the reality is there's no entry to barrier. Everybody can get in at any time. It's just timing and how bad do you want it?
Let's talk about the opposite end of the spectrum, because we've been talking about a lot of like 6 figures, 7 figures stuff. Let's talk about first-time home buyers. We have a grant program through Loan Depot, can provide up to $7,500. There are income restrictions on it. Depends on where you currently live. So how that works is we look up, and if your current residence falls within one of these tracks, then we're able to get you grant money. That's one of our first-time home buyer, that like down payment assistance programs. Through NJHMFA, we also have the ability to provide $15,000 towards first-time home buyer grant, not grants.
Wow.
This is structured as a second lien, but it's a forgivable second lien. So it's not all rainbows and unicorns with this program. But if you live in the property for 5 years as your primary residence, then it gets forgiven. So it's a beautiful thing too.
That was
So
great.
that's for first-time home buyers. If you're a first-generation home buyer, you can get up to 22,000. So it's the 15,000 plus the $7,000 on top. So we have those types of clients too. First-time home buyers, limited on funds, don't have like incredible incomes, but have good to like pretty good incomes. They don't have that much in assets. They have decent credit scores. Decent credit scores meaning like 620 plus. These clients we could help with these types of programs.
It's a great program.
Yeah.
And it's good for those that are watching. Tag your friend, tag your family, tag your coworkers. Right? These are conversations that should be had on a daily basis. Right? I wish that everybody had you in pocket dial. So that they could reach out when they have any questions.
Yeah. Back to you saying, hey, real estate has like almost no barrier to entry. I would say low barrier to entry. With first-time home buyers, there's a common misconception. I need to have 20% down. It's not.
Right.
If we go conventional, you could go as low as 3% down for your first property.
That's right. Right.
It's not your first time anymore if we're using conventional programs, 5%.
I know you said you go as low as 620, but I think that we as consumers need to understand how we're consuming. And as a finance coach, I'm finding loan officers are sending me referrals every single day based off of old gym memberships and, cell phone bills that weren't paid and medical bills that if you had stayed in touch with them and do small payment arrangements, maybe they wouldn't hit your credit report. I think that is really important that we need to start being more proactive on that side as we're getting prepared. Having this conversation is great, but Lawrence, I don't want to waste your time, right? If my credit is shot, I don't have my down payment saved, I shouldn't be asking a realtor to show me houses if I'm not ready.
We do this also for exactly that, to protect the realtor's time. I do my pre-approvals sitting in front of a computer, either inside my office or inside my home. I'm comfortable here. The realtor has a tough job. The realtor has to go on the road, show multiple properties. And if that client's pre-approval wasn't done correctly or legitimately, it could be a huge waste of time for everybody. So yeah, we do this also to protect realtors' times. But back to credit scores and minimum down payments. So for that NJHMFA program, the minimum is 620 for the conventional program. In general, we could go as low as 580 and go 3.5% down with a FHA. If you're sub 580, then the minimum down payment requirement goes up to 10%.
Okay. You see, again, when you go to certain banks, the way that they're kind of putting it together, it could be confusing. And that's why having an advisor like yourself to kind of break things down the way that we're able to is very helpful. I'm going to say that.
It may be confusing, but other banks also may have overlays on top of the guidelines. So whereas our maximum debt to income ratio is going to be, let's say, 49.99%, their overlays may be 43%. So that pre-approval could be more if they came over with us.
So again, thank you for those that are watching. If you're watching on the live, hashtag live. If you're watching on the replay, hashtag replay. Lawrence, this is a ton of very useful information for any homeowners that are out there or investors. Lawrence, what would you say if someone does own a home and, they have some equity in there? What are some projects that you can do for that second purchase? We've talked about FHA a lot. What did you say about investment?
So you're saying if somebody has some equity and they wanted to make an investment play?
It could be so many scenarios we could really talk about, but just, a person is a homeowner, they have equity, they want to get into a second house, a bigger house, maybe they had more kids. What are some of your thoughts for people who are outgrowing their homes and not really leveraging the equity?
Okay. You work with so many, Anthony, you work with so many real estate people. I'm sure you know the term golden handcuffs, which is, to break it down in like simple terms, is people don't want to sell their homes who have like very low interest rates. So if somebody has a very low interest rate and they have some equity in their home and they're running out of space, they have a couple of options, right? They can take a home equity line of credit. They could take a closed-end second mortgage, and they can build on their current home. So adding a level, putting on an extension. That's one way that I've seen people handle new space needs. Other
Found during
people,
COVID, a lot of people were doing these new innovative additions, right? Getting tired in their house and starting working on it. Yeah.
yeah, just driving around, I see a lot in my neighborhood where they're doing add a levels. So previously a one-story house, now it's a two-story house. So I've seen that. Also in my neighborhood, I'm looking around right now, there's like extensions that go off the back of the home, creating like a massive living room. That could be also helpful for someone. If they're looking to invest, so if they're looking to invest, they also don't need to put this directly back into their home. But if they take a home equity line of credit or take a closed-end second mortgage, they can use those funds to buy that investment property too.
That's true. And so what would you say, Lawrence, would be your call to action for those that are watching?
I would say don't be shy, don't be nervous, don't be scared of the process. The only way to figure out what you can be pre-approved for right now as a baseline is to just go ahead and talk with that local mortgage professional, whether it's me or somebody else, to get that baseline. And if it's good enough for right now, go ahead, get pre-approved, start making some offers. If we're looking to make improvements to credit, we'll definitely connect with Anthony to get those improvements completed. If we're looking to save more money, Anthony can help you with your budget. We'll put together a strategy. It's not, sometimes not right now is an answer, but it's not no in general.
Right. It's like it's not if, it's when, right? As they say.
Correct.
And I really appreciate you coming on, Lawrence. And we've been having a great lunch and learn session. For those that missed it a little bit, please go into that YouTube link that I'm going to comment in the post section. I think it's really important to have these conversations talking about lucrative financing. What are your final thoughts as we're rounding third base?
I think it's one of your questions that you brought up. Should people wait? I don't think so. I think if you're looking to buy, you should start exploring now. The values will continue to go up. So
I agree.
There's people out there that are waiting for rates to hit a certain rate. Just expect competition to go up. For every 1% the mortgage rate goes down, 5 million new qualified buyers enter the market. It's not going to be all in our neck of the woods, but there's going to be a couple 100,000.
Wow. And how does it make you feel every time you're able to kind of take an application to closing?
I'm helping a lot of people fulfill their American dream. There are people that I have young buyers, I have middle-aged buyers, I have older buyers, and I'm happy to help all of them.
Right. I always say credit doesn't have a face, but I see some people that are younger than me, 21, 22 years old, 25, they have multiple doors. I'm like, wow, I'm in my late 30s already with 5 kids. But it's never too late to get into the market, So for those that are watching, I want to say thank you. I think that it's really important as a finance coach. I'm always here to provide impact. I want to be a resource to the community. And we always close with a closing quote. This is brought to you by Tim Ferriss. It isn't enough to think outside the box. Thinking is passive. Get used to acting outside the box. So I hope that you learned something new on today's Lunch and Learn. Lawrence, hang out with me in the afterglow. Don't go nowhere. But for those that are watching, go in grace, go in peace. Thank you so much for watching. This is Anthony Rosa, the Community Finance Coach. And if you need any help with credit, please feel free to reach out to me. Talk to you guys soon. Bye, everybody.